All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. This morning is far less bullish out there in the market than what the index is. Might lead one to believe, and we'll talk about that. But it's not exactly super bearish. But we're not stacking on a real bullish move here to what we saw yesterday when it comes to the market, especially when you look at what's driving things and utilities being the top gainer out there, in the market this morning. So, very kind of typical of what we see after days like yesterday. You kind of get this kind of rest pause day, where some of the better stocks, keep trickling up. Some of the worst, pull back a little bit off of the highs. The analysts kind of, affect some things a little bit there. And, we're seeing that out there in the market today, as we do have U.S.-Mexican talks here today. We've had a bunch of economic data here this morning. We'll go through and take a look at what that data has been. It's one where we're going to see some option values compress here overall. And, just kind of very typical day after what we had yesterday. And we'll go take a look at a couple of those, couple of kind of yesterday scenarios and what we see after, those types of situations here after we make changes with the challenge. Now, Under Armour here is 1 penny shy of its exit level. But it it hit it. It's close enough. So I'm going to go ahead and take 4 contracts off here, right? So basically, I'm just going to separate this trade into 2. Here. And let's come into Under Armour, and we'll take off 4 contracts there. It's at our penny. It's at the 24.94. So let's see. Bid ask 286, 291. So let's go sell 4 of these here. -4. I'm just going to put in a market order here. So trimming about $1,100 off the trade. So 288 was my fill price there with those four contracts. So 288. Let me make sure the alert goes out here. 288. Preview that. So 4 contracts at 288 sold. There we go. Easy enough. All right, so that leaves us with 6 contracts at 288 or 280, whatever, 290, and running here with those. So we've essentially pulled off the gain, about there with it. So on these 4 contracts, the close date here 6/5 a.m. and trade exit price 288. So on this one, I'm just going to put 288 as the price and run with it. Now, we do have to alter our ATR here. So we're going to go 24.94, and it's going to recalculate our profit levels, and 26.40 is our next profit level here for it, and the exit level on a stop is 24.21 there with that. So there we go. About $1,000 worth of a gain there in a day and a half. I'll take it. We've kind of had back-to-back hit their price targets here, which is very nice to see. Now with Disney, we're not at our price target here just yet, and stock's up about 30 cents here, but the option value 375 is the option value, so just going to put that in. There we go with Disney. So we're updated to what things look like right now. So that puts the challenge just over 6,700 here. So not bad after 1, 2, 3, 4, 5, 6 trades, two still on the go here. Now there are no new signals here this morning, though we do now have cash available to go after any new signals. There are some that are very close, and if it were the close today, would be triggering. One of them is Procter & Gamble. This one's having a really nice day here today. This is one we traded already for the challenge, right back here, and the price of the stock's pretty much back at the same level. This is a stock, and I mentioned it when we traded it for the challenge before, that when it triggers, it tends to be very accurate. Tends to be really accurate, but it also doesn't tend to hit its two average true ranges, right? So it tends to get stopped out with the time stop, here with Procter & Gamble, which is what happened on our first trade with it. And if we come back here and take a look at the trade here on Procter & Gamble, we entered on 510, exited here on 517 with the auto exit, and we're able to make some money on it. Able to make $1.20 on the option, about $500-$600 here on it, which is great. Great there with it, but we don't get that same kind of average true range movement normally when it comes to Procter & Gamble. Walmart also has the potential to trigger here, and this is one I've kind of shown the last 2 days as having potential, and it's been trying to fight through this 103 level here, and looking very good. If it were closing right here, it would probably be a trigger, though I don't know that for 100% certainty. But anyway, that's where things are. We have a lot of 3-7 crossovers that emerged early on today. Visa with a 3-7 crossover. Caterpillar had a 3-7 crossover. Delta, IBM, JP Morgan, Nike, Netflix, Triple M, MGM, Whirlpool, JP Morgan, Micron, but not all of those 3-7s are holding on. Something like a Micron, that's a pretty hard sell here, right? And what they're basically saying is saying, look, the market changed yesterday. It changed. But it didn't change 100% to where it's ready to buy garbage. And I apologize. I know there's some Micron bulls out there, and great. I think you have a good argument. But right now, when you look at Micron, you look at them fundamentally, it's not one of those stocks that fund managers can go and justify in a great way. And so we are seeing it sold, and rightfully so. But we're seeing tech in general getting sold off the highs here today as the Qs, pull on back. Apple was up about $4. It's kind of holding the majority of its gains. But when you look at, you look at just some of the other tech names out there, a lot of them well off their highs. And most of these are names where, they were hit pretty hard on Monday. They snapped back a little bit yesterday, but even Amazon didn't push back to its highs from the week, right? With all these stocks yesterday setting, breaking above 7-day moving averages and pushing into new kind of 3 to 5 to 7-day highs, Amazon was nowhere near that. These stocks, are getting sold here today. Facebook's of the world, there. I don't think it's a death nail for them or anything like that. But we are seeing, that action here. All right. So that leaves the challenge here with Under Armour. And look, I mean, it's gone up 2 average true ranges in about the same time as gold did, right? Our gold trade did. It's been very quick, very fast. The algorithm is not built to catch these, right? It's not built to say, hey, you know what? Let's go catch big 2-day moves. It's built to catch, 7 to 10 day, 7 to 14 day trends, but occasionally those 2 average true range moves happen very quickly. And with gold and with Under Armour, that has been the case, and so definitely nice to see there. But that's not going to be, that's not going to be a norm, here all the time. So. So anyway, holding on to 60% of Under Armour, and then with Disney, we saw it rally yesterday after we got in, and it's kind of pushed up into this 136 level. Tried to this morning, found a little bit of resistance here. This is one I'd be very surprised if it moves 2 average true ranges in a matter of 2 days. I'd be shocked, but it is one that I do expect will, we'll have a nice little trend associated here with it. That we'll be able to, ride here for the challenge. Yesterday, I was asked about Boeing, and I was sent a chart, and the chart showed the 3-7 downside crossover right here, and it showed the slow stochastics 39.1 trading below 50. Which are the kind of two elements, the two visual elements I've talked about for the algorithm to kind of guide, hey, where entry is going to be, right? And I was asked, why wasn't this a put entry here with Boeing? Why wasn't it why wasn't it signaled? Why didn't it trade for the challenge? And it had those visual parameters, and it even had the trigger. And yeah, it went down the next couple days. And on this day, I even talked about it possibly signaling. But it didn't signal. The consolidation risk was too high on it to signal. And one of the things that is, it's one thing to build an algorithm and to, find, okay, if the stock does A, B, and C, then go. Right? That's easy to do. It's one of those things where we could talk for weeks about all those systems that are out there. You look for this, you look for that, you get this, you get that, you go. Right? Those have been around, for forever, and they'll be around forever. They're simple, they're easy to follow, but they're also very difficult to apply options to, and very difficult to kind of gauge after they start to move. One of the things that makes the Trader Minute algorithm unique here is it's not just looking for, well, this setup and this setup and this happens and that happens. It's going back into the past history, running the data, running a few algorithms here with it, and saying, hey, you know what? Does this stock have a high potential of moving at least 2 average true ranges? It's not looking at support. It's not looking at resistance. It's not looking at volumes. It's not looking at, price levels and 200-day moving averages and 50-day moving averages and 27.5-week moving averages. It's not looking at any of that type of data. It's looking at how the stock has performed in the past when a similar setup has been. And does it have a high probability of moving to average true ranges? And the thing with Boeing is it did not have a high probability of moving to average true ranges. And, we can see that Boeing, the average true range was about 9. And we can see that, from this 350, it moved down to about 332 at its low. So it barely moved 2 average true ranges. But it never closed or hit an area where, it stayed 2 average true ranges and continued. It's just kind of bounced into that 2 average true range area. And with the algorithm, it's looking for stocks that are going to move outside of that 2 average true range area, and that have a high probability here of that. There are a few stocks in the watch list that are a little bit different, like Procter & Gamble, which we've talked about, which it typically doesn't move outside that 2 average true range area, but it's so profitable with the signals, right, and in the way that it works, that I'm not going to expect to hit a home run with Procter & Gamble, but to pull a 30 to 40% gain off of it, the odds are very high. So willing to run with a signal there from it. But that is a big part of what the algorithm is looking for, and why some things trigger and some things don't, even though visually they have the exact same thing going on here with them. Okay. All right, so that's the challenge. That's where the challenge is at here this morning, and that's what we're running here with. Last night, we had some economic data, and out of Europe, and it was interesting data, and it catalyzed a further increase in S&P futures, and it's the PMI data. Now, this is data that we saw the flash numbers come in a week ago, so these are the final numbers here, but it's for May. And one of the things about the data, it's not fantastic. It was slightly better than expected, but showing growth, slight growth. But one of the things about the data, it's a 3-month high. What does that mean? Oh, we've been talking about this economy that's slowing, right? It's still growing, but the rate of growth is slowing. Well, in some of the European data, we're starting to see the rate of growth actually increase. It's like being on a bicycle, right? And going from half a mile an hour to 1 mile an hour, right? It's really slow. It's not, exactly anything to write home about. It's not going to get you anywhere real fast. But it is kind of moving in that direction. And so we saw a fairly positive reaction here to it. Some of the best numbers were out of Germany, which has seen some of the worst numbers here of late. So that kind of gave a little bit of a reprieve. Then we kind of go into this morning and some of the U.S. data, and we have the ADP employment report, which is the private jobs report number. The government number will come out on Friday. But it's expected 175 in terms of job growth. Came in at 27,000. That was a big miss. A very big miss here. And to kind of put it in perspective, and they don't have it down here on the chart down here. Oh, they do. Sorry, it's in the background, but it's all the way down here. This is the lowest number on this chart. This is the lowest number in years. Now, it's also one of those types of things, and the market knows it, where a lot of times when we get a number like this, the next month it exaggerates to the upside. Something happened structurally that, affected things. Is it trade war talk? Is it something else? Is it, there are a lot of speculations out there with it. But, one number doesn't make a trend, but definitely a sour number and really kind of catalyzed a pullback or the pullback that we saw in S&P futures here after Europe. So we have Europe up. We had the economic data in Europe helping to drive it higher. Then we kind of get this 6:15 my time, and it drives S&P futures down by about 10 points here with this number. So a fairly sour number, but one where in and of itself, does it mean a ton? Well, it's like any economic data. One number doesn't kind of say it all. But it's definitely one the Bears are going to take and run with and say, hey, you know what? And if we see that number confirmed by the jobs report this Friday, we can see some real kind of trouble come back into the market. But it's still one of those where the bulls are going to argue, yes, so what? Great, the data's weaker. We know that already, right? We know that already. Now we have the Fed who's going to cut rates, and if the data's weaker, they're going to cut rates faster, and that's going to be a positive, right? And it's kind of in one of those catch-22s for the Bears where they go, well, do we want good data or bad data, right? And, it's a very interesting dynamic and one that we have seen, we've seen many times here before. And then we get the PMI services number, which came in here, and I put a note in chat about it, but a 3-year low on the number. Where we saw the PMI number, a 3-month high in Europe, a 3-year low on the PMI services number here in the U.S. So a big kind of, still showing growth, but barely there with it. And then we have the ISM non-manufacturing index, which is kind of the services, and it came in better than expected. And in fact, if you look down here below at the chart, kind of what this data has been doing, right? It's kind of been weakening here over the last year. And here this month we get a little pop in the data, and this is one of those where we can go out and look at similar to how we looked at the manufacturing number. In fact, I'll come into the ISM website here, and we'll just take a look at the services number, the non-manufacturing number. And, first thing I want to look at are new orders, right? New orders are going to be kind of the gauge of, was this number good or bad, or positive or negative, right? Good, bad, probably not the right word. But new orders grew. And, oh, wow, employment grew. Kind of right in the face of the ADP number. But new orders and employment, both grew here. We have inventories that grew, which isn't exactly a great thing. Prices dropped a little bit. New export orders fell off. Imports fell off. Right, these are two areas that are falling off. But pretty interesting to see the number actually grow, even though we have some of the fall offs in imports, exports, sentiment, there with it. So it's not the best number ever. It's not a great number, but it could have been a heck of a lot worse, and it actually is a little bit better than what was expected here. With it. Now, we've had a Fed parade this week where Fed speaker after Fed governor after Fed governor has come out and spoken. We have the U.S. Beige Book, which is released by the Fed. That'll come out here today, and that is them publishing the economic conditions. We have Powell, the chairman of the Fed, yesterday, almost kind of ridiculing the Fed dot plot that the Fed has kind of based policy around for the last however many years, and kind of suggesting a shift needs to be made away from that because the market doesn't read it correctly. And so it's kind of just been this, been a lot of words out there and a lot of speculation. Is the Fed going to cut rates? When are they going to cut rates? By how much are they going to cut rates? And we've really gone from this situation of, wow, the economy is so great, grand, and wonderful, which has been what has been thrown down our throats for the last 4 months, by those in power, by the Fed, by analysts, just talking about how great the numbers are when they just haven't been, right? And we've looked at they just haven't been, right? They've kind of been really looking at them with rose-colored glasses, and now all of a sudden, we don't see a big shift in the numbers happening, right? And in fact, some of the numbers are actually getting better. And now we hear the argument, well, we need to cut rates. We need to cut rates. Let's cut rates, right? And it just tells you what? It tells you that the members of the Fed are not data dependent anymore. They're stock market dependent. And that's a huge shift in the Fed. And it's a shift that we started to see back in December. And it's a shift that has continued on this year. And it is a shift that will forever change the Fed from here on out. Because the Fed is never going to be able to go back to being data dependent without there being some sort of big calamity or big catastrophe. They're going to be playing stock market from here on out. In 2010, 2011, 2012, we saw the Fed basically destroy the stock bond correlations. This kind of, hey, you know what, stocks, you're in stocks or you're in bonds, you run with one or the other. We saw them destroy that element. Now we are seeing the Fed go and just say, hey, we're no longer data dependent. We are stock market dependent. Now, are there political pressures kind of forcing that? Absolutely. Absolutely, it is being forced. But it is something that as the market goes forward in the years to come, that the market participants are just going to have to adjust to and understand. And I think yesterday was a sign that big money understands that the Fed is playing stock market, and something that will continue. And is that good? Is it bad? Who knows? Putting a judgment behind it or whatever, it doesn't mean anything. I think it's understanding that that is the change that's out there, and so when the markets have had a bad run, and the Fed is speaking, and the Fed goes on a parade, chances are we're going to see some nice pops. When the market's been on a boom, been on a tear, and the Fed goes on a parade, we'll probably see some drops. And I suspect that will be a very common pattern, not just for the months to come, but for the years to come, when it comes down to the Fed. Barring some sort of major shakeup overall. Okay. So anyway, that's some of the data. That's some of the Fed. Obviously, there are a million opinions out there when it comes to the Fed and the rate cuts and all of that. It's been a headline writer's dream out there. And bottom line, does much of it matter? Well, not really. Not really. A risk reward exposure. Run with what you're comfortable with. Trust what you see on your charts and go. And that's about all that all that you can control in any type of market. Not just this market, not just the market that's going to happen in 3 months, not just the market that was 3 months ago, any market. That's all you can control. Risk reward exposure. There are always going to be variables. There are always going to be unknowns. There are always going to be risk factors, and that will never change. We do have the ECB tomorrow coming out with their announcement. The European Central Bank. Over the last year, ECB, news has been, ignored pretty much because they don't say anything. It's been the same policy, same stuff, nothing new there with it. But, we'll kind of see how that, if that affects things. And then, we'll have the jobs report here on Friday. And the reality is none of that data may matter. And what happens in the White House today between the U.S. and Mexico may be more important, and that's going to happen later on this afternoon. Okay. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.